Welcome to Short View Trading. This is your morning market hit for Monday, 27th of November. It's around 9 a.m. London time. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And what we want to dig into in this video is how do you go about trading equity index futures on a 1 to 2 week basis? How do you go about deciding whether to go long or short S&P 500 equity index futures or FTSE or NASDAQ or DAX? That's what we're going to dig into in this video. Well, the first thing you want to think about is how's the market been trading? And clearly last week, certainly on the surface, seemed pretty subdued. S&P 500 up about 1% on the week. Most of that gain really on Monday, the rest of the week pretty flat. It was Thanksgiving as well, of course, so volumes were down. Look at S&P 500 E-mini volumes, really pretty low, not much above 1 million contracts traded most days, much less on Friday in the shortened trading hours. So price action looked pretty subdued on the surface last week, but actually if you dig under the surface, there was some pretty interesting stuff going on. First of all, of course, we had the Nvidia earnings early last week on Tuesday after hours. And as you can see from the chart in front of you, the response of the market was pretty tepid. The earnings were fantastic. Blowout quarter, much better than expected, just as happened in August. But just like in August as well, the market sold off after the earnings came out over the next couple of trading sessions. And as you can see on the chart of Nvidia, it's now put in a double top with two tops put in both on its earnings date in August and the one last week. And with that, a number of the other Magnificent Seven stocks are looking kind of mixed in their price action. Tesla struggling, others back at highs but not yet through them. And so there's a question being raised under the surface: is sector rotation starting to play out? Is the market leadership changing? And is that what we're seeing in the price action over recent weeks and months? But elsewhere, there's some pretty other interesting price action. Bond yields having pulled back sharply over recent weeks, traded sideways last week. They paused in that sharp move lower in yield. Equally, despite what we've seen in the Middle East starting on October the 7th, the oil price is actually weaker over the last week or two, which is pretty interesting. A lot of chatter in markets that maybe OPEC is struggling with its compliance with its quotas. Saudi's getting pretty upset about this, the meeting of OPEC being delayed, and all of that weighing on the oil price and creating intraday volatility, pushing it low temporarily. That's pretty key as well, because oil and bond yields have both been key drivers of the equity market strength over the course of November. So flat is actually quite interesting in that respect. Is it a pause in that falling 10-year bond yield and the falling oil price, or is it finding a base and it's about to change direction? These are critical questions going on under the surface, going on in other key asset prices. And then over and above that, I think most interesting is look what's happened in the put to call ratios. So the market may have been pretty flat over the back end of last week, but there was certainly a lot of put buying. There was put buying in the CBOE, the broader measure of the broader equity market in the States, and you can see put to call ratio picking up quite sharply in the back end of last week, telling you that market participants are starting to protect against their downside. Equally, if you look at the NASDAQ 100 equivalent ratio, same sort of thing. And also in the DAX calls less puts ratio, lots of put buying over in the DAX in Europe as well. Now that's pretty interesting, because what it's telling you is there's a lot of protection of downside risk in portfolios, which is effectively the same. Buying puts is effectively the same as selling equities. And of course the market's absorbed that, a sideways price action in the headline indices, despite put buying effective selling, is actually a pretty bullish sign. And this, of course, is occurring all at the same time as we got a lot of short-term sell signals. We showed you some in the video last week. Technical indicators, risk appetite indicators, all been on sell in the past week, 10 days. And despite that, we've had quite a bit of sideways movement in these equity markets. So in that respect, we're left with a key question for 1 to 2 week swing traders. Are these equity markets consolidating their gains over the first few weeks in November? Or are they in fact starting to roll over, given all the short-term sell signals on our models? And that's the kind of question we think about each and every day in our daily RAG, also known as the RAG Trader. You're welcome to take a trial. Simply click on the link below. We'll send it to you for free for a bunch of trading sessions. All we need is your name and email address, no credit card details required, and then you can work out if you find it interesting and if it's useful to you in terms of your trading decisions. And for those of your subscribers, as always, it'll be in your inbox 8:30, 9 a.m. every morning London time. So what are we watching today and this week? Well, there are three key themes. Firstly, we've got a couple of top central bankers giving speeches, Jerome Powell later in the week, and then Christine Lagarde, ECB president, a couple of times this week, starting later today, Monday. And then on top of that, there's an inflation theme over the course of this week. We've got Eurozone flash inflation, headline and core CPI on Thursday. And also on Thursday, we've got the US PCE deflator. This, of course, is the much more closely watched inflation measure that the Fed is much keener on than the CPI one. So that'll be critical as well. And then finally, there's a bunch of macro data out over the course of this week, culminating with ISM manufacturing on Friday. But ahead of that, we've got Chicago PMI, we've got US consumer confidence, and a bunch of other data. For example, Eurozone M3 money supply and a lot of Chinese PMIs as well. So plenty to focus on over the course of this week. So that's it from us. That's your morning market hit for Monday, 27th of November. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.